Alright guys, so let's talk about the US debt crisis today. In 2025, the US government will be facing a refinancing shock. We have a tsunami of treasury bonds maturing that will drive the economy deeper into debt. This year alone, $9.2 trillion worth of US debt will either outright mature or need to be refinanced, and that's a quarter of the total outstanding debt. And let's put this bluntly, the US government is broke. Paying back $9 trillion to bondholders will be impossible without borrowing the amount. And if you're wondering why not just print the money, if Trump gets the Federal Reserve to monetize the debt, this would just ignite a new inflation crisis. Ironically, it would also drive yields higher because confidence in the debt market would collapse. So the money will be raised by issuing bonds 100%. However, there's already a tsunami of issuance coming for deficit spending. In the first 6 months of the year, Besant will be borrowing nearly $1 trillion from the open market, 815 billion in Q1 and 123 billion in Q2. Despite Doge moving to cut government workers, the spending is still going to continue. We are on a runaway train today, which is going to impact the national debt and eventually destroy the purchasing power of the dollar. And if you're a bondholder, you want your money to be worth something when you get your cash back. Now, a yield of 4 to 5% sounds really tempting, I understand. But the more bonds the Treasury issues, this poses a problem. Interest payments will start to go up and the money supply will increase over time when the bond matures. And US borrowing is out of control today. The Congressional Budget Office, or the CBO, is forecasting a 1.87 trillion US budget deficit for 2025 this year, and that's $70 billion more than the year before. Here's the bad news. This is even before factoring Trump's tax cuts. He wants to lower the tax rate to bring companies into the United States. However, by doing that, there will be a shortfall. And you guessed it, the amount will be borrowed into existence. Here's why this is the most dangerous refinancing period for Scott Bessent. In the past, he scolded Janet Yellen for borrowing money through T-bills, which are shorter-term bonds. Since 2022, Yellen has borrowed a ton of money by issuing treasury bills, and these are your 1 month to 1 year bonds. And this issuance hit 86% last year. This isn't ideal because raising money from T-bills, they have a cost. You don't lock in your interest payments, you have to refinance them year after year. And we have no idea how high rates will be 10 or 20 years down the road. Yellen borrowed a lot of T-bills because she felt long-term rates were gonna fall. But we all know what happened. Long-term yields kept going higher and higher. So now we are stuck with a refinancing crisis where the US government will have to borrow more money to service the old debt. We aren't even talking about the deficit needed for this year, 2025. 23% of US debt today is in T-bills, and that accounts for $3 trillion worth of bonds that will be maturing this year. This is going to make the Federal Reserve's job of rate cuts even harder. If Bessent chooses to borrow even more short-term bonds for deficit spending, this will put him at the fate of the global economy. The next refinancing round could be much higher in the next 12 months to come. Bessent might be borrowing at 4.3% today, but it could be at 5% tomorrow. It will blow up the debt. However, Bessent is trapped. He has chosen to continue with Yellen's crazy plan to sell more short-term debt. He will not be borrowing additional long-term bonds. The US Treasury has decided they'd rather blow up the national debt and gamble with it than risk the stability of the US economy short-term. Now, what borrowing rate controls the entire economy? It's not short-term T-bills, it's long-term treasuries, especially the 10-year bond. And this chart reveals a lot. The 10-year bond yield in rate has gone well above the 3-month bill rate. If Bessent wants to borrow money through a 10-year bond, you have to pay a borrowing cost of 4.5% for the next decade. Now that isn't too bad per se, you lock in your interest payments for 10 years. However, the US economy is on the brink of collapse. We have massive layoffs and a cost of living crisis going on. Not forgetting a ton of people are living off their credit cards. It's not a good picture, so Bessent can't afford to buy more issue more long-term bonds that will only push yields up even higher. This is the state of the American middle class, and they are getting hollowed out. In 1971, 61% of people were in the middle income bracket. That was the backbone of the US economy and how things are supposed to be. However, within just 50 years, a lot has changed. People in the lower income bracket has increased to 30%. But look at the increase in the upper income, a whopping 8% jump. The rich are getting richer, the poor they are getting poorer, and those in the middle class are getting squeezed. By this year, we can expect the middle class to fall below 50%. What the US government needs is to stop borrowing money and reduce spending. Money always flows to the top, especially when it comes from deficits. The distribution of wealth is not equal here. Trying to shift borrowing from long term debt to short term bonds is like shuffling deck chairs on a Titanic. You look like you're doing a lot of work, but it's a waste of time. The ship is still sinking. From today well into the future, the US will be running trillion-dollar deficits. In fact, this projection is actually quite generous. By 2030 or maybe even next year, we can expect this to hit $2 trillion annually. And this is why the bond market is revolting and why yields they are rising up. There's just too much supply of debt and not enough demand. Investors know that the US government can't pay back the debt. They will eventually default, and no one in the right mind wants to hold the bag forever. Now, thanks to Trump, there's going to be even more pressure on the demand for US bonds. When you wage a trade war, there will be consequences. Foreign countries hold nearly $8 trillion worth of US debt. That's around 22% of total outstanding. The rest are domestic holders like the Fed, mutual funds, and ordinary investors. And what happens when you clobber the world with tariffs? The world will clobber back, and because trade with the US drops, what's the point of recycling their reserves back into US bonds? You either start dumping them or simply buy less. Trump isn't just punishing China, he has shown the world that he's willing to take down his G7 allies and his immediate neighbors as well. Now, how is this good for the US bond market that needs a constant flow of customers to bid for the debt? It isn't. Sooner or later, the burden will fall to domestic buyers. And when day X comes, the day of default, local bondholders will be the most affected. People who buy assets will be winning. Those who hold US paper, well, they're going to be the big losers here. Now, as we speak, the price of gold has reached a new historic high of nearly $2,900. It has outperformed the S&P so far, and it signals a collapsing USD system. And it's not that gold is getting more valuable, it's that the dollars in your wallet they're getting more and more worthless. You can buy less stuff with them, including ounces of gold. It's how the US dollar system works, and we are all in it. Every time the US government ramps up deficit spending, every time they push up the national debt, it brings the world closer towards the day of default. There's a good reason why rating agencies like Fitch they have downgraded US debt. Even they can't deny the disaster is coming. In 2024, the government spent over 13% of the entire budget on interest payments alone, paying back bondholders. This amount is more than national defense or Medicare. No matter how Besant continues to borrow, interest payments will continue to balloon in 2025 and beyond. This is written in stone. It's no surprise why central banks are buying gold. Even though the dollar is strengthening, the biggest risk is still US debt and deficits. Not to mention how the US is weaponizing everything. Now, if you face a hegemon that uses the dollar system and their consumer market against you, you'll want to run to a neutral reserve asset. Now, in 2025, central banks are still expected to buy even more gold. They will be the biggest driver of gold prices. They bought over 1,000 tons in 2024, and thanks to the Russia-Ukraine war, the pace of buying has doubled. And this is a wake-up call to the USD system. The world is afraid, they are terrified, and they are diversifying away. So you must ask yourself a very big question. Do you think Trump will stop weaponizing the dollar? Is he just joking about BRICS? Well, he just tariffed China. It's clear as day for the whole world to see. Now, investors know the dollar isn't the best asset long term, and central banks have to find alternatives. That's why global gold demand is still rising. The pace of growth is constant, But notice how demand is still growing despite gold prices soaring. In 2010, the gold price was around $1,200. In 2024, prices went above $2,400, but the world kept buying more and more gold. As we said earlier, gold doesn't get more valuable, it's the dollar that's collapsing. And the world wants to buy an asset that's beyond the control of the US government. Physical gold held with you can't be sanctioned away. And more importantly, you can't just print gold from thin air. And seeing what has happened in 2025, this demand isn't going to go away. But as always, let me know what you think. Can the US government stop borrowing money? And will central banks all over the world continue to rush for gold? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.